Welcome back. Well, Nigeria's economic landscape in 2025 remains fraught with challenges as inflation, exchange rate volatility, tight monetary policy continue to shape the country's macroeconomic stability. Let's get a sense of what to expect, as we brace for economic data coming up this week. Let's talk to Arnold Dublin Green. He's the Chief Investment Officer at Codrus. Join me right here in the studios. Great to have you.
Thanks for having me.
Yeah, I'm sorry. I keep making that joke every time. We don't have drinks.
I was about to ask what joke is it?
I know, yeah. But
yes, you do.
It's that time again. Everyone's going to be reporting inflation numbers from, locally, internationally. We're all bracing, for that. But, bringing it down to Nigeria.
Okay.
Expecting that data sometime in maybe Wednesday or Thursday this week.
The 15th it should be.
15th, yeah. So what are you seeing, for the April numbers? It's rebased at this point.
Yes.
But we're tracking that.
Yes, of course. I think, first of all, with the rebase has brought a lot of noise, and it's just hard for everyone to quiet the noise and just understand what it means. Without the rebase, regardless, we think that a year-on-year inflation is softer Q2 2025 and Q2 2024 without the rebase. Obviously, with the rebase, it is soft because of the rebase. But anyway, going through the year, we still think that April inflation is still sticky. We saw a dip in inflation in February, and it started to pick up again in March. We think that we still see high input costs in April, play out through April. We saw depreciation of the Naira due to all the geopolitical issues and Liberation Day and everything else. And you can't deny the impact of a weaker Naira on our inflation numbers. So we see higher input costs, lower Naira to dollar or depreciation of Naira to give in April a pretty sticky inflation.
Yeah, I've talked about inflation so much, at this point.
Yes.
It's just hard to think about anything else, at this point. Because, yesterday I was at pharmacy, trying to buy, something, and, they were attending to a lady in front of me. And when I told her the price of what she was buying, she said, for this small thing, over 20,000 Naira. So that seems to be, the vibe.
Unfortunately, it's what we have.
When you go to the stores, they're still so high.
And it's going to be like that for the rest of the year. Maybe inflation probably cools off as the year ends, but we still think Q2 inflation stays high. That's all I can say. Inflation stays high. On a month-on-month, maybe it might get softer as the second half approaches, but for this quarter, especially for this month, probably see a slight uptick in inflation. Food inflation also plays a huge impact on the inflation basket as well. So that should cause a slight uptick in inflation numbers. And so it stays tough. Yeah,
and going by what we saw the stock market last week.
Okay.
Quite the run.
The
bulls were firmly in control last week, and I'm wondering if that will continue into this week. But who's beating inflation right now in Nigeria, in your opinion?
As in what sectors beating inflation? Or
sectors, whatever you're investing in, terms of performance.
So specifically today, everyone's waking up to a risk-on day. And what I mean by risk-on day is a day that everyone around the world is happy to take risks. I'm sure you saw China, US over the weekend sort of came to an agreement. We saw a huge risk-off play for most of the beginning of this quarter. When I say risk-off is, no one liked equities, no one liked anything with risk. Right. So I think this week we'll probably see more firmer prices across. So your usual banks, I've always loved the palm oil names, right? So your Presco, your Como, and those names have always been good in a weaker Naira environment. So where we know that because of geopolitical tension is causing lower oil prices, which will affect the Naira, which should cause a weaker Naira, there are still some names and some sectors that still outperform or do well because they have a small export component to the revenue line. And so the aggregate names are always good. And they had some good results last week or the week before. So regardless, going through this week, because of the risk-on environments globally, which is good for equities, and then perhaps still the general softer Naira environment, I like the aggregate names. Banking sector is good. So I think equities as a whole should be firmer this week.
Right. And it was quite good. Last week, seeing the likes of Beta Glass, that's one's just been running.
Beta Glass is something everyone's
talking about. Running.
And a stock like Beta Glass is a story to the Nigerian consumer that regardless of what we're going through, the consumer is still strong. So it's a testament to that.
Right. Some would say they feel really weak.
Yes, of course, but we still spend. We still spend.
We still spend.
So on the revenue side, you have your Guinness, your consumer names on the top line, right? Because what's top line? Revenue is price times volume. So price times volume. So regardless of the price going up, the volume is still going up because consumers are still buying. So on the revenue side, you see the consumers, regardless of inflation, the consumer names and the consumer guys are still selling because consumers are still buying. Right. So there's some testament there.
All right. And talking about, some euphoria we've seen in the markets, from last week.
Okay.
Oil wasn't left out.
Yes.
Big jump there.
Yes.
Over 4% for the week.
Yes.
Last week. And we're kicking off, today.
Comfortable.
Quite strong. Over 2%. Rise for Brent and WTI, and that's our biggest foreign exchange earner. So is it better days coming?
So oil is a tricky one. Oil is a tricky one because we all started the year knowing that oil will end up softer because we know we had a general overview of a softer global consumer demand. So a global consumer demand is what drives oil prices in general, right? And this is global consumer demand. So we all knew that consumer demand would be slower this year. So we all thought, okay, oil will probably started off about $80 or so a barrel. We all knew maybe $70 a barrel was the outlook. But then, the tariffs kicked in. So the tariffs just made everyone realize, okay, this consumer demand is actually going to get weaker because tariffs are bad for consumers. So you had the tariffs kicking in, and then you also had a contraction in US Q1 GDP numbers that came out, which made everyone feel more uncomfortable. So generally, oil is one that's, I think the slight jump that you've seen in oil towards the end of last week and today is what we call a relief rally. Is when we know that oil has sold off a lot. Oil is weaker.
Is it a dead cat bounce?
or a dead cat bounce, right? So where it sold off a lot. We're also expecting some more. We're expecting an unwind in the production cuts from Saudi Arabia. We're expecting some more. I think on the 3rd of May, the OPEC Plus countries announced that they're going to add another 411,000 barrels per day from June. So we know that there's going to be a huge or some inflow of oil production. So we're still expecting softer oil price. So today is just, fundamentals are weak, but it's sold off massively from, an average of $71 in March to an average of $66 in April. And we saw Brent touch $59.
Wow, so short.
Yeah, so I think it's just a relief rally where it's like, okay, we know it's weak, but it's too weak. So there's some opportunity to take there.
Right, and maybe we could get a positive week again this week.
Start of the week is
some
positive.
data coming up.
Yeah.
For I know in the U.S. what's maybe playing out with some of the stockpiles and all of that. We should get some data. And that drives price.
Yeah.
But could it be another positive week?
I understand as a Nigerian you want positive oil, but see the thing is, it's easy to call in the week. Easy-ish. I mean, because what we're seeing in oil really is just a relief of, okay, UK and China have come to a temporary deal, right? And we know that what's been driving the markets with capital flows has been, Trump. And because of the predictability of Trump, it's hard to call the market as it comes. What you can do right now is enjoy the rally that gives you oil in maybe at 65 or above 65 for a few days because of this temporary deal that they've hit.
Right, and we did see, weakness for the Naira.
Yes.
Definitely, analysts have attributed, the drop in oil prices, to the weakness of the Naira. We know we need that. We need oil, for most of the revenue coming in to the country. But should we say, we definitely expect a weaker Naira if prices of oil stay low?
Yeah, so
going forward, or is it something else? So
Naira is an oil story, unfortunately for us, right? So oil accounts for 40% of our revenue between 2018 and 2023. Oil accounts for 56% of the budgeted revenue for 2025, and this is oil at $75 a barrel, right? When we saw the strengthening of the Naira starting from Q4 to early this year, Q4 last year to early this year, a lot of it was foreign portfolio investors coming in simply because there was a belief that, okay, the reforms have kicked in, or the reforms are kicking in, and everything is going to be okay. And there was a view that the Naira had sold off a bit too much, so the Naira was undervalued. And with the reforms kicking, every global investors should get a better return on their capital. But what we've seen now, if your budget is at $75, right, and Naira is at $65, a few things need to happen, right? So when we get the supplementary budget coming, Naira needs to depreciate, right? Because if you're selling something in hard currency, and the price of that thing has gone down, and you can't increase the production of this thing, you actually have to reduce how much. You have to actually reduce the price at which you sell it in terms of your local currency. You have to depreciate it, so you get more bang for your buck in that sense. So Naira, in my view, Naira stays weak or most probably gets weaker as oil gets weaker. And also we have to, push our oil production, and we have to reduce our capex now coming in, and we have to borrow more. But regardless, I think it'll be, if you model $65 of oil, $65 per barrel of oil against Naira alone without anything else changing, you're probably going to get about 2,000 Naira dollar or so, slightly over, right? So what we don't want to do is see Naira get to 2,000.
We don't want to
social issues.
No.
So what you might have to do is do all four, right? So you have to figure out how to boost your production, reduce your currency a little bit, or depreciate your currency a little bit, reduce your capex and borrow more. So just so you sort of get the budget that you want for the end of the year.
It's funny or strange that it's so hard for me to accept this rate.
Of course.
I don't know. It seems psychologically my mind is trapped in about maybe 600
of course
Naira to the dollar, so it's hard.
Yes.
I'm sure it's hard for most people
yes,
too.
Of course, yes.
To get used to these rates, and I guess that makes it harder for the central bank at this point, because they've been trying to defend the Naira.
Of course, yes. And there's a lot of pressure, right? Because you're getting the foreign portfolio investors, the global market investors, the capital flows that came in due to the strength of what they saw with the reforms coming in, right? You're getting them now exit. Also because, remember, they're taking losses on their global positions. So they also have to protect those other global positions. And like I said, Naira is an oil story. So you're holding Naira, you're holding a bunch of other assets, and you're seeing oil go down from $75 to $65 or even $59 a barrel. And you know that this currency you're holding is very strong oil, because 50% of the revenue for this currency is oil. So what do? You reduce your Naira position. So it's only natural that we're seeing a weaker Naira. It's only natural that we will continue to see a weaker Naira if oil stays.
Talking about a weaker Naira, see the reserves. We had an uptick about 2 weeks now.
Okay.
That's for foreign reserves. Hopefully, we're hoping that continues, because that gives the CBN firepower.
Of course,
to defend the Naira. But if all prices stay weak, then that even makes it harder. But it's good. We did see an uptick. But it's rate decision setting season that's coming up too.
Yes.
This month. What do you see? Another hold?
There's no rush.
Something else?
There's no rush. I know there's a lot of pressure from local businesses, a lot of pressure from so many of us to reduce interest rates, but there's no rush, especially with all the global political tension and the trade tariffs and Trump Liberation Day and oil and how that's affecting us. There's no, if I was the governor of the central bank, I wouldn't be in a hurry to go away from my hawkish stance. I'll most likely just keep everything on hold. Also, inflation. This CPI rebase has caused a lot of noise, and I'm pretty sure they're also trying to figure out what does it mean.
Right.
If you've rebased by how many basis points, what does it mean also for inflation? So there's so much confusion and so much dust that I expect the central bank to hold.
Yeah. I guess that's, it's just, it's a different scenario here, because in the U.S., we know President Trump has called Fed chair a lot of names.
Of course,
so far, but we don't see that happening here.
Yeah.
The president's not that bullish about cutting rates.
Yes, of course.
Because at the end of the day, Trump says, everything is great. The U.S. economy, why aren't you cutting rates?
Yes.
At this point, but we do not see that even happening in the U.S. Fed chair is not going to cut rates.
No.
Same thing.
Same thing. It's so much going on, so much noise that central banks globally are trying to figure out, what does everything mean. You're seeing a shift in also structure. You're seeing a structural shift with a lot of global central banks buying gold in huge volumes, right? So there's so much going on globally that everyone's trying to figure out what this shift means and then how their decision affects this new.
Right, and we're seeing good news coming from U.S.-China talks. That's taking gold lower.
Yes, of course. Yes, of course.
At this point, but it seems $3,000 will remain.
Yeah.
For a while.
Yeah, I think so. I think gold, right? So going back to what I was talking about, a structural shift. From 2022, you had global central banks. Global central banks doubled the amount of gold they were purchasing annually. And this was before, for many reasons, right? It's 2022, you had the Russia-Ukraine war, and everyone saw how the US placed sanctions on Russia, and I believe it made all the central banks frightened, all the countries frightened. So they had to sort of diversify from US treasuries just for more stability. And so what you're seeing is you're going to continue to see this diversification of their reserves, of central bank reserve into gold. So regardless, the softness you're seeing in gold today or last week is just it's the dusts. I mean, gold went up to $3,500 and back down to 3,200 or so, which, like I said, is normal. Globally, there's a bit of risk on because of today's news with US and China, so it's normal. But fundamentally, gold still has the play. It's still a safe haven play. It's still it's still showing. It's still depicting.
It's not like we get peace and gold just crashes.
Not that I know of. I mean, fundamentally, gold is still good.
Yeah,
gold is still good fundamentally.
Fantastic. Oh, it's great having this conversation with you. I've been talking to Arnold Dublin Green. He's the Chief Investment Officer at Codrus. Thank you so much for joining me.
Thank you for having me. Thank you.
All right, we'll take a quick break now. When we come back, find out what's playing out in the global markets. That's in a moment. Stay with us.